Hi, my dear friends, how are you doing? So, my cold is still not gone. I would have sensed the change of voice as well. All right, so let's uh, wind up with this particular chapter, charitable institutions. If you remember, we had done all these things in the previous class. So, today we will be starting off with special provisions relating to tax on accreted. Accreted means, accumulated or increased income of certain trusts and institutions. In simple words, trust you will get exemption always. But then when will you not get exemption? When would you not get any exemption? You would not get any exemption when the trust is no longer registered as a trust or registration is withdrawn, or you've seen our particular conditions of registration. If you have violated any of those conditions where your registration has been cancelled, withdrawn, inoperative, all these things you have seen different wordings. So will tax come on if the what do you say a trust becomes inoperative? Will tax come on if trust registration gets cancelled, etc. Anyway, but predominantly yes, on cancellation it will come for sure. This entire process is nothing but the exit tax, is what we are going to discuss. Exit tax. So basically, if a trust is no longer a trust, you have to pay some tax called as the exit tax. But practically what happens, there is trust PJ. P and J are the trustees. There is one more trust, two people, KD fellows. They have some 50 lakh black money. Correct? So this trust PJ also has around assets, etc. worth around 50 lakh. This is white. So if I cancel this trust, I have to pay tax on this. Instead of that, what we do, I will coolly exit from this trust. Trust will remain. This K and D fellows will enter this trust. I will coolly exit and take this black money. P and J will take the black money and go. So for them, white money is converted to black money, and they don't have to pay any tax on this thing, trust income. And for KD fellows, their black money is converted into legitimate white money, legitimate money or white money. They wanted that. They wanted to convert black to white. So people like this do this, guys. Many of my friends do all these things because in the center we have a chartered accountant who will do the deal. Right? That's how we know all these things. Practically this happens. So nobody will endeavor to pay 115 TD. 115 TD is what? In simple ways, if this and all was not there, PJ is now, trust PJ is exiting. They're saying, boss, I don't want to have any trust over. So whatever this income is there, on that 115 TD tax you have to pay, because all these years you have taken exemption. Now what exemption? No exemption will be granted. This was the ideal scenario. Okay. So assuming all this golmaal doesn't happen, what is the exit tax is what we need to understand. Let's see that. 115 TD. Whatever I told you now, this one is out of syllabus. Don't write all that in the exam. Right? Yes. 115 TD. Let us see. So let's try to read the section to understand the gist of the story. 115 TD. 115 TD. Notwithstanding anything contained in this act, where in any previous year a trust or institution registered under 12AA or 12AB. I told you procedure for registration is 12AA. Fresh registration has come under 12AB. Both we have seen. You can register afresh. Converted into any form which is not eligible for grant of registration under 12AA or 12EE. Means the commissioner has cancelled it. You have modified the objects clause, then you have filed under 46(3), all those things. Merged with any other entity other than the entity which is a trust. So you have merged with some other entity which is a non-trust, then gone. Failed to transfer upon dissolution all of its assets to any other trust or institution registered under 12A or 12AB, or to any fund or institution or trust or any university or other educational institution or any hospital or other medical institution referred to in clause 4 or 5 or 6 or 6A of 23C of section 10 within a period of 12 months from the end of the month in which the dissolution takes place. Yeah. So if you have not transferred upon dissolution all the assets etc. to one more trust which is doing the same similar activity, or anything registered under 1023C which is exempt under 1023C, within a period of when should you transfer? 12 months from the end of the month in which the dissolution takes place. Dissolution is happening in February. So February end of the month plus 12 months. Like that you should. If you haven't done this, these are the 4 circumstances. So you should remember these circumstances. Convert into any other form, which means what? Commissioner has cancelled the registration because of that, or you have modified the object. That is, you have converted to any other form. If your object only is modified, which is you are no longer in the form of the charitable organization. Merge with any other entity which is not in the similar line of business. Fail to transfer upon dissolution any assets. On these 3 scenarios, what will happen? 115 TD will come into the picture. 115 TD will come into the picture. Now, you see here, will this also come? If your registration has become inoperative, most important point, if the registration has become inoperative, what do you think? Under 11.7, under 11.7 guys, so they can ask you an MCQ. We had told under section 11, subsection 7, I'll show you that, you will recall easily. 1 second. Yes, where a trust or institution has been granted registration or has obtained registration any time, the said registration is in force. Nothing contained in section 10 shall operate to exclude any income derived from the property. So we had discussed this 11.7. Here again, provided that trust or institution whose registration has become inoperative under the first proviso. Such registration shall become inoperative from the date on which the trust or institution is approved under 1023C. I told you people were taking double benefit. One under your 11, 12 you were taking benefit. Then again under 1023C you were taking benefit. Arun Jaitley cut that in 2018, said it is not possible. So then I told you, if you have already registered under 11 and 12, you will not be eligible under 1023C, or if you have jumped to 1023C, what happens to your registration in 11 and 12? It becomes inoperative. The key word here is inoperative, not cancelled. Now linking that to this, will you have to pay exit tax? Will you have to pay exit tax if your, registration becomes inoperative? Answer is no. It's a very important point. Answer is no. No tax, no exit tax if it becomes inoperative, because I'm not cancelling the registration. This point number 1 is cancellation of registration. It has got nothing to do with 11 subsection 7. Okay. So I hope you understood that. It is not for inoperative. If it's inoperative, it's okay. It doesn't matter. Is what this section says. Check the notes. Trust or institution registered under 12A, 12AB shall be charged additional income tax at MMR. 30%, 12% plus 4%, 34.944% will be charged, guys, on the accreted income as on the specified date. So when case 1, trust or institution is converted into any form which is not eligible for grant of registration under 12A or 12AB, 2, trust or institution merges with any other entity as discussed. Case 3, which has failed to transfer all the assets and liabilities on the dissolution date within how many months? 12 months. On the end of the month in which the dissolution takes place. Yeah. So trust or institution converted into any other form and not eligible for registration under 12A or 12AB. This happens when what? Registration granted to a trust or institution under 12A or 12AB has been cancelled, as I already told you, or it has adopted to modification of the objects which do not conform to the conditions of registration. Yes, so it has changed the objects then. And even if it's changed the objects, it's okay. But if it has not applied for fresh registration under 12AB, which we have seen, or which has filed for fresh registration and the application has been rejected. These are the circumstances. So only then exit tax has to be paid. Tax on accreted income. Accreted income means basically the value of the assets at the end of the day will be in addition to the income tax payable by the trust on its total income. Income tax calculation is separate. This is separate. This is for all the value of the assets which you are taking exemption all these years. Obviously 15% normally you will take, plus then 85% if you apply, that also you will not pay. Only extra if you would have paid, that you leave. Apart from that, all the accumulated wealth that you have made all these years, you need to pay, bro. That's all. Very, very simple. Right. How much? We'll see. So what is the entire calculation of this accreted income as on specified date? FMB of total assets of the trust. Note number 1, this one. And total liabilities of the trust. Note number 2. That's it. FMB of the total assets minus total liabilities is what you need to see. Assets shall not include, 3 exclusions are there. Just remember those 3 exclusions. Assets acquired out of agricultural income. Obviously, N1, agricultural income. Any asset acquired out of that agricultural income should be excluded. Assets acquired by the trust from the date of creation of the trust to the date from when registration became effective under 12A or 12AB. Those assets also will not be taken into consideration. You are running a trust in 1980, but you got registration only in 1992. Fair enough. That time the rules were different. Registration was not mandatory. So these 12 years, whatever assets have accumulated, why the hell should I pay tax on that? That will be excluded. Okay. Assets transferred on dissolution to other trust registered at 12A within a period of 12 months. Of course, if you have already on dissolution transferred it within 12 months, then no tax. Because if it is not done beyond 12 months, only then here. If it is not done, correct, which has failed to transfer within a period of 12 months, only then you have to do it. Otherwise, these assets are not to be included. Trust was created on 1/7/2010 under 12A, but registration became effective on 1/8/2016. As I told you, 6 years assets acquired shall not be included in the total asset. Liabilities. Liabilities are what? Liabilities related to the asset in note 1 above also shall not be taken into account. So, any liabilities associated with these assets. Assets acquired out of agricultural income. You have bought a house out of agricultural income and then there is a loan against that. So that loan should not be taken. Like that they are telling. Right? Specified date. Now what is the date here? These 3 dates are also important. Case 1. Converted to non-eligible form. So date of cancellation of registration or date of modification of objects of the trust. Correct? That is the time, that is the date when you need to pay. Because if you see here, on the accreted income as on the specified date. When should I compute? First of all, what is accreted income? We have seen. Then what is the specified date? This date. Dates are also important, guys. Converted to non-eligible form means date of cancellation of registration or date of modification of objects of trust. If you are merger with another entity, date of merger. Dissolution, date of dissolution. That's all. Very, very simple. What are the due dates? So this is the date on which you will compute the accreted income. This year is the date on which you will actually pay, due date of payment. Case 1. Converted to non-eligible form. Registration granted under section 12A or 12B has been cancelled and trust has not filed an appeal to ITAT. So if you cancel the registration, you can file an appeal to ITAT against the order of cancellation. Let's say in this example, you have not filed any appeal to ITAT. Then 14 days from the date on which period for filing appeal to ITAT against the order of cancellation expires. Time limit for filing appeal is 60 days, guys. So the day you receive the order of cancellation, 60 days you need to wait. and 60 days it's not there. So when can you actually, when should you pay? 60 days are over now. So like today you received, 60 days is the time for you to file an appeal to ITAT. You have not filed the appeal to ITAT, so it has become time barred. From the end of the 60th day, 14 days. 14 days from the date on which period for filing appeal to ITAT against order of cancellation expires. When did it expire? 60 days. 60th day it expired. 14 days more. Registration granted 12A or 12AB has been cancelled and the trust has filed an appeal to ITAT. ITAT by its order confirms the order of cancellation. They say yes, you are right, it has to be cancelled. 14 days from the date on which the order of ITAT confirming the cancellation is received by the trust. Correct? It is not the date of the order, it is when you have received, trust has received. Order date is, let's say, 10 Feb. You receive it on Valentine's Day, 14 Feb. So 14 days from which day? From this day. You have to pay the tax. Registration granted at LA has been cancelled and the trust has filed an appeal to ITAT. ITAT by its order quashes the order of cancellation. They said it cannot be cancelled like that. So in this case, 115 TD is not at all applicable because it's not cancelled. Trust is not required to pay any tax, obviously. Then you don't tell 14 days from the day you receive. No, don't write all those things. Trust has adopted modification of its object which does not conform to the conditions of registration 14 days from the end of that particular previous year where the trust has not applied for press registration. So end of the year will always be 31st March. So 14th April you need to pay. Trust has adopted modification of its objects which does not conform to conditions of registration and trust has applied for press registration but the application has been rejected. If you have filed an appeal or if you have not filed an appeal, what to do? 14 days from the date on which the period for filing appeal to ITAT against rejection expires. 60 days again time is there. If it expires, 14 days from that day. Or if you have actually, filed an appeal, then same. 14 days from the date on which order of the ITAT confirming the rejection is received by the trust. If appeal is filed by the trust and ITAT confirms rejection. Same thing. If it's merged with another entity, 14 days from date of merger. Dissolution means 14 days from the date on which 12-month period expires. 12-month period expires. Same. These dates are important. Just keep them in mind. Let's take an example of the timelines. Examples. I'll name it case 1, case 2. Registration granted to trust has been cancelled. Let us say order of cancellation 14th August 2021 received by trust 17th August 21. Time limit for appeal 60 days. 16th October 21. Under that, we can have 3 situations. Right, this is case 1. Three situations. In this, ITAT quashes the order. order received on 15/7/22. No 115 TD because there is no tax on accredited income. Second, ITAT confirms the order. Received 15/7/22. So guys, important to know the specified date. Accreted income will be calculated on this date. This is the order of cancellation. Accreted income calculated as on specified date, that is 14th August 21. But tax paid on or before 14 days from the date on which this order comes. 29/7/22. 14 days. 29/7/22. Trust does not appeal. So accreted income will be as on 14/8/21. That doesn't change obviously. But tax will be from which day? 14 days from the end of 60 days. When did the time limit expire? 16/10/21. That is 16/10/21. So what is the time limit of paying 115? Same this 16/10/21 say 14 days. TD 30/10/21. 30/10/21. Very, very simple. Done. Case 1. Case 2. It has adopted or undertaken modification of objects in that there is no space here. Has not applied for fresh registration. Has applied for fresh registration and that is also cancelled, or you can say application has been rejected. Application rejected. So if the, let's say the trust here modified objects on 14th August 21, it has to apply for fresh registration time limit to apply for fresh registration is the end of the previous year, and assume it has still not applied. Now accreted income will be the same. Accreted income as on 14/8/21, date of modification, and 115 TD 14 days from the end of the previous year or the end of the financial year. That is 14th April 22. All examples I am giving becomes very easy for you. Last year has applied for fresh registration and application has been rejected. Fresh registration applied on 16th August 21. Rejected on 14/9/21. Received the rejection on 17/9/21. Appeal filed. No appeal filed. No appeal filed means tax will be on which date, guys? Same. On the day here you have modified. It's modified its objects on 14/8. I'll write here also. Modified on 14/8/21. So if you have not filed an appeal, accreted income as on 14/8/21, tax will be 14 days from the end of the period in which you can appeal. You can appeal when, guys? Appeal could be filed up to which date? You have received the order this time, no? See? Fresh registration you applied. You rejected it. When did you receive? Obviously, when you receive it only, within 60 days you can file an appeal. So tax will be 14 days from last date of appeal. Last date of appeal could be what? That is 14 days from 16/11/21. So 30/11/21 is the last date. I mean, that is the date you have to pay tax. This is the date you have to pay tax. If appeal has been filed, ITAT confirms rejection. On 13/7/22, received the confirmation on 15/7/22. So accreted income as on which date? 14th August 21. Tax will be 14 days from this one, 15/7/22, which is 29/7/22. All things covered, guys. Beyond this, they'll not ask anything. Don't worry. All these are exam questions. The master chart, time limit. Right? Hope you understood. Very, very simple. Alright guys, hope you got the entire structure. Okay. Now, here we have written, no, what have we written? Accreted income on the specified date. How, what is accreted income? Fair market value of the total assets of the trust. How will we calculate the fair market value? Guys, remember we had done one rule in 5627, rule 11 UA. Same copy paste with some changes. Control C, Control V with a few changes. That's why that rule 11 UA was very, very important. We had done it that time. Same, no change. So let's see. Check it out. Aggregate FMV of total assets of the trust institution advance tax. First one you see. TDS, TCS, advance tax reduced by refund if any and unamortized deferred revenue expenditure not included. That shall be the following. Valuation of shares and securities. FMV of quoted shares and securities. Average of the lowest and highest price. So guys, in rule UAE, this was one change. In rule 11 UA, not UAE, sorry, UA, 11 UA, it was the lowest. Here it is average of the lowest and highest. Right? Where there is no trading, then the average of highest and lowest on a date immediately preceding that date. Valuation of unquoted shares. The same, A plus B minus L by PE into PV, same thing. Here, book value of all the assets other than B excluding TDS and all these things. FMB, A is the book value, same thing. B, FMB of jewelry, bullion, precious metals, artistic thing, all that similar, no change. Third, book value of the liabilities excluding paid up capital, amount set apart for payment of dividend, reserves and surplus, even if the resulting is negative, other than reserve for depreciation, provision for taxation, other than TDS, TCS, advance tax as reduced by, provision for unascertained liability, provision for contingent, same. It is the same, no change. One thing guys, here in rule 11 UA, liabilities will include dividend payable on preference and equity shares if declared before the date of gift. This extra point was there. I'll show you. Check this. Come to D11 guys. D11 we had discussed rule 11 UA. In that you see here lowest price. lowest price. Here it is lowest and highest. Point number 1, first change. Second change, in the liability part, everything else remains the same. Liability part, here. Dividend on equity and preference shares where such dividend have been declared before the date of transfer at a general meeting. This dialogue was there. This dialogue is not here. Check this. Dividend point is missing here. Dividend point is missing. So book value of liabilities excluding these things. There, that part was there here, you see. But not including the following amounts. The dividend part was excluded here. Here it is not excluded. One more important change. Shares and securities is the same, FMA or NRV. Immovable property, you see. Here, immovable property, guys. STV of immovable property only. Only the stamp duty value was there here. Only the stamp duty value was there in that particular thing. Here you see. Stamp duty value or FMV of such immovable property, whichever is higher. That's the third change. First change is lowest and highest. Second change is that preference share and equity share dividend, that is missing here. Third one, immovable property, it is stamp duty value or FME, whichever is higher. Other things remain the same. So capital fund, corpus fund, aggregate book value of liabilities, etc. does not include this. Obviously, capital fund, corpus fund is totally different. Reserves and surplus or excess of income, provision for contingent liability, provision for unascertained liability, all this the same, guys. The following shall be a liability: provision for income tax less excess provision, TDS, advance tax, self-assessment tax, add income tax refund, same. So an asset on which accreted income was computed and tax was paid on free TD is transferred. What is the cost of acquisition for calculating shall be the FMV of the asset taken into consideration for computing the accreted income. Very simple. So since I am paying tax on this FMV, when I sell it off also, what will be the cost of acquisition? That particular FMV. Interest on non-payment, 115 TE, 1% per month from the 15 days calculated if tax is actually, till such date where tax is paid. So 14 days due date, 15 days onwards, interest also will come. And the particular trust will be deemed to be SSC in default. The tax is not paid on 15 TD. The principal officer, trustee, trust of such institution shall be treated as SSC in default. In case of dissolution, transfer of assets to the recipient trust, such recipient trust shall also be treated as SSC in default if they do not follow the provisions of this particular trust. The trust taxation. So that completes trust, guys. That's it. All this will come for minimum around 10 marks. So you can solve the previous year's questions. Many such questions will come. Every time they keep asking. We have solved all the examples here. So try solving the questions from the Q&A vault. You will be able to answer them. Okay. Please solve them without fail. Okay, guys. So next session we'll do some miscellaneous concepts, all chow-chow-bath. And after that, we'll take a short break from DT because 60-65 marks are already over. After the next session, 60-65 marks will be over. So then what we can do is, the remaining 5 to 10 marks we'll see later. I want to start off with international taxation. So let's finish international taxation and then come back to those small topics. Okay? Because we have done everything extremely in depth. So we will stop after the next session with respect to direct taxation. We'll stop. Pending will be some MAT, AMT, small things. It will not take time. And some amalgamation, demerger, small concepts, guys, won't take time. Roughly around 10 marks, 5 to 10 marks, because we have already covered major portions. But international taxation, since it's there for 30 marks, which you have to study, we'll go 20-25 hours, we'll finish that, 20 hours around, and then come back to those small concepts. Okay? Fine. So next is will be all the miscellaneous, important chapter, all miscellaneous. Everything, whatever we had missed out, we'll finish it off. apart from those other topics which we have to do later.